Welcome to our APGFWN webinar, everyone. Let me introduce to you what APGFWN is. Most of us have joined APGFWN and have worked with the network, but because we have newcomers to the network, I would like to introduce the APGFWN. APGFWN is Asia Pacific Greens Federation Women's Network. APGFWN was established in November 2015 with over 18 members from Asia Pacific and Middle Eastern countries. We are a group of women guided by green principles, and our vision is to bring together all the women who are working for the betterment of our future planet, and who each face united and unique difficulties in their own countries and cultures. APGFWN was formed to encourage, develop, mentor, and inspire those women towards inclusive leadership and activism. The webinar series is a part of the Gender Equity Projects, a series of many different projects that we do. The Gender Equity Project began in 2018, featuring green women from around the globe who have brought a wealth of experience and knowledge. They dealt with issues of great importance to address gender equity for women in today's world. The recordings of the previous webinars can also be found in APGF YouTube under APGFWN webinar series playlist. And also, please check out our website and subscribe to our social media for updates about our events and work. I will share the links in the Zoom chat box. Now I will pass the mic to Minami for an introduction of our speaker. Minami.
Thank you, Soohee. And welcome again to our webinar event and to our wonderful guest speaker, Preeti Tolia, who has kindly taken the time to join us today. It is such a delight to have you and to learn of the wonderful initiatives you have accomplished in your career. I'd like to share a brief background of our guest speaker's accomplishments with the audience today. Preeti Tolia is a development banker and assistant general manager of the National Bank of Agriculture and Rural Development, also known as NABARD, in India since 2000. She has handled a variety of portfolios in her 22 years of career, during which she has served in 3 states. Her multi-sector experience has been spread over finance and accounts, corporate planning, rural infrastructure development, microcredit, financial inclusion, refinance, human resource management, and climate change. She has a degree and master's in regional development with specializations in rural development. And she also has carried out research on Indian border trade across the Himalayas from the School of International Studies. Welcome to our webinar today, and I would like to hand the presentation over to Preeti Tolia.
Thank you so much, Minami. It's a pleasure to be with all of you. Thanks to APGFWN. I handled this portfolio on microfinance quite some time back. So thanks to them, I was revisiting, my portfolio, what I had been doing all those years ago when microfinance was a buzzword. And as far as my organization, NABARD, is concerned, National Bank for Agriculture and Rural Development, it was one of the flagship programs at that time. And it is still very relevant because despite all the efforts all the countries are making, all the stakeholders are making, we still have a substantial number of people who are in the poor category. So it is still very relevant, and more so for women, because microfinance has focused on women, because women were not known to be very creditworthy. The banks did not find them very bankable. As far as India is concerned, we did not have property rights, right? So when you go to a bank, any of us who go to the bank, we want a loan, they ask for security, they ask for collateral. Now, by and large, the women in India, many of them who did not know how to read and write, who did not have any property in their possession, they could not offer a security against any loan that they would want to start an income generating activity. So it's still very relevant, it's still very important. And because APGFWN concerns itself with green politics, so with climate change and disaster management, the most vulnerable women are known to be the most vulnerable section of the society. So from that point of view, also microfinance is very relevant. So in the interest of time, I will start with my presentation. So the topic of the webinar is microfinance in rural India, and I have just laid out as to why microfinance is very important, and from the point of view of women as well as climate change. Now, as far as microfinance is concerned, some of you might be aware of Dr. Muhammad Yunus. He is known to be the father of microfinance. He was an economist in Bangladesh, and this is close in the 70s. Bangladesh went through, Bengal famine, and there's the poverty in Bangladesh being what it was. He came across some women who were in need of a loan, and they were not able to get loan from the banks. And when he saw this, he tried to intervene. He became their guarantor. Sorry. And he tried to convince the banks that despite their low income, despite lack of collateral that the women did not have to offer, the women were still creditworthy and could be extended loans. The banks were somehow, they were not convinced. He went on, he proved himself right. There were some women who were into basket weaving. He lent them a small amount. The banks were still not convinced, and he extended his scope to other villages in Bangladesh. And then he came to a point that probably he will have to set up his own bank, and that is how Grameen Bank came into being. And after having introduced and shown that how microfinance can work for poverty alleviation and for the empowerment of women, this particular concept got replicated in other countries. In India, of course, Bangladesh, of course, even in Indonesia, Philippines, as far as Bolivia, it has been a very successful model. Coming to India, we have many financial institutions. We have a central bank, which is Reserve Bank of India, and then we have public sector banks, private sector banks. We have regional rural banks. We have even cooperative banks. Cooperatives, as I understand, is very successful in Japan, for instance. So a three-tier model was adopted in India also, and we have banks. They have a very large outreach in the rural areas. Then we also have financial institutions like NABARD. They are specific. They are focused on sectors like NABARD is focused on agriculture and rural development. We have SIDBI, which is focused on small industrial development, small industries development, and we have industrial development, so on. So when we look at the financial system in India, the network is huge. We have about 12 public sector banks, we have 21 private sector banks, we have 43 regional rural banks, cooperative banks number 31. And so all put together, we have about 1.2 lakh bank branches, and we have 2 lakh ATM machines all over India. And yet we have a chunk of our population which is not able to access to credit when they want, because these formal banking institutions, they have their set procedures, which somebody who does not know how to read and write finds very cumbersome. And somebody who, as I just elaborated, if somebody does not have any collateral to offer, then the banks were not forthcoming in extending a loan. And just a fundamental thing that I would like to point out, what is the difference between microfinance and microcredit? These are the two terminologies which go together, but microcredit is restricted to the loan facility, and microfinance is loan plus. That is, it will also include, let's say, insurance. It will also include pension, savings, money transfers. So anything credit plus comes under microfinance. So microfinance includes not only loans, microloans that could be given, extended to the low income strata, but it also is now including insurance, pension, etc. Now, with this financial system in place, we have the concept of microfinance, which in the context of India, it was, I mean, every country which adopted the microfinance concept of Grameen Bank of Dr. Yunus, they modified it as per the requirements of their country, the circumstances in their country. As far as India is concerned, the microfinance model that we adopted, and NABARD was the pioneer in introducing the concept of self-help group. So through this microfinance model, we introduced the women to the concept of thrift, how you save, little by little you save, and then you are able to take micro loans, which, and where, when you take loan, all of us are aware that we have to repay the loan. So the idea was that small amounts would be lent out as a loan, and then very small nominal amounts which the lower income strata is able to afford to pay comfortably. So the installments were kept very low. The repayment schedule was drawn out over a longer period than the banks normally offer. And then, of course, the financial services like money transfer, etc., that also became a part of microfinance. We will learn about it in a subsequent slide as to how this self-help group model came into existence and got operated. So microfinance, of course, the main features are that it caters to the low income groups, and the loan amounts are very small, and they do not require collateral like the conventional banking requires. And so this is very helpful for the low income strata to gain access to credit. Like Dr. Yunus said in one of his addresses, that to make a dollar, you need a dollar. If you need to make money, you will need some money. So that is why it's very important that these low income groups, if they have to make some get involved in some income generating activity, they need access to credit. And when we talk about the low income group, as far as India is concerned, is just recently in March, it has been revised. There has been an upward revision, and the household incomes who was eligible to avail of microfinance, these were beg your pardon, these were households which were earning up to 3 lakh rupees, 3 lakh in 1 year. Now, in US dollar terms, to give it a perspective, in US dollar terms, it works out to 3,866 US dollars in 1 year. So that is the level of poverty we are talking about. That is the level of, low in the strata of India, which is earning as little as 3,866 US dollars a year. So this segment of the population, for this segment of the population, microfinance was tried out as a tool, and it has been very successful. Now, loans are generally taken for income generating activities, but they could also be for personal uses, and it is also, studies have also shown that when women take loan, they don't spend it on themselves. They first comes the family. They would probably take loans for their children's education. There could be somebody sick in the family, so it would be some medical attention that is required for any member. So that is what women give priority to, and that is why microfinance had kept women as their focus, because when you lend to women, the rate at which the family comes out of the poverty level is quicker. So that is why focus of microfinance had women at the core. As I've already shared that the microfinance model was very flexible. The tenure of the loans was very short. When we go to the banks, if I take, let's say, housing loan, so the time period is totally fixed by the banks. And if I default on any payment, they would also be I have to pay additional charges for that. Now, for a poor person, it's very tough and it makes life even more difficult for that individual. So, all these features were introduced into microfinance so as to enable the borrower to not default and to enable him or her to make repayments in very small amounts, which did not work for banks, because banks after all have to run business, and it did not fit into their business plans. But over the years, since microfinance was rolled out, we have seen that microfinance is good business for the banks. It is not that it does not make good business sense. The banks, over a period of time, they learned that it is feasible and absolutely viable. Now, because of the features of microfinance, the advantages they come out of these very features. These small loans, small repayment amounts, the shorter duration, repayment schedule. It was advantageous because the rural poor did not, default, and that is why they were able to make use of the loan that they were able to avail under microfinance, and it helped them move on to improve their standard of living and the income. So it enables poverty alleviation. Microfinance is a very effective tool when it comes to poverty alleviation. Then for anybody, especially for the poor who does not know how to read and write, it is very important that the loan that person, that individual is able to avail is hassle free, and also it is timely. If a person is in need of a loan and that person does not get it at that particular point in time, then it's of no use. So it is easy and timely loan availability to this poor section, and at reasonable rates. Now, microfinance, the rates, as far as self-help group is concerned, it is a group of women who decide as to what should the rate of interest be, who in the group should be lent out to, and so it helped the women to take decisions, and so it empowered them. So this rate of interest is on the higher side if we look at it from what we avail from the from the conventional banks. Yet for a bank, it made things easier for a bank, because now the self-help group model that we follow in India, we have about 5 to 10 members on average in the group. So while a bank would have had to lend out to, let's say, 10 different people, it lent a bulk amount to this particular group. And then this group it took that amount, and there was on lending to the individual, the member of the group who required it. So the bank found it easier. They of course charge their rate of interest, and the self-help group, they decided on their own rate of interest. So when we say reasonable rate of interest, it is when we are comparing it to the unconventional sources, the informal sources of microfinance, which was money lenders. Now money lenders, when those poor who were not able to go to the bank, they had money lenders in the villages, and the money lending was actually very exploitative, and the rates of interest would be much, much higher. It was not transparent. In some cases, it even led to bonded labor, because the rural poor, was the individual was not able to read and write, so he or she was not able to keep track of how much of loan is yet to be repaid. And the moneylender used that situation and exploited the rural poor. So, since microfinance is centered around women's empowerment, and it does not require collateral, and the transaction cost, as I just explained, for a bank comparative vis-a-vis the transaction costs of a bank, which would require for say 10 people, it was reduced to just one transaction. So it brought down the transaction cost. So all these are the advantages of microfinance. Now, rural India, of course, in every country, they would have their rural areas, they would have criteria. In India, we have any area which has population of less than 5,000. Now, India, you know, is the second most populous country in the world. We have 1.4 billion people here. And out of this 1.4 billion people, 70% of us are in rural areas. So 70% of us being in rural areas, any scheme which is introduced by Government of India or by any bank is catering to the rural India, and many of them are in the poverty category. The number is roughly 260.5 million. Another criteria how India rural, what is a rural area, is the density of population. So about every square kilometer is inhabited by roughly 400 people. And the profession, the in the rural areas, agriculture is predominant. Agriculture and allied activities like dairy, fisheries, etc. So it is male dominated. 75% of the male population is engaged in agriculture and allied activities as far as rural India is concerned. Now, as I earlier mentioned, that there are 1.2 lakh bank branches in India, but how many do we have in rural India? Only 36,383 bank branches as of the latest data by our central bank. So this is the level of exclusivity rural India is facing when it comes to formal banking and finance from the conventional banking structure. Sorry. When we look at microfinance in India, there are major milestones. Grameen Bank, of course, came into existence in 1983. But the experiment that Dr. Yunus started was roughly in 1976 or so. He has written a wonderful book, by the way. It's his autobiography, Banker to the Poor. So any of you who are interested, you can go through that book. It's a wonderful account of how he saw a particular problem and was so deeply impacted by the poverty in his country that he came up with this microfinance model. So that started in late 1970s, but the formal bank, Grameen Bank, which he created especially for microfinance, it came into existence in 1983. As far as India is concerned, around late 70s only, we had Self-Employed Women's Association, SEVA. It is a bank, and Ila Bhatt is a name who she's a lady who was working for the empowerment of women, and uh, many women are in the unorganized sector. We have a formal, many of the workers, they are labor class, especially they are in the unorganized sector, and there is a lot of exploitation. So as far as India is concerned, we can trace it back to the days of Seva when it got created in 1974 by this really inspiring lady Ila Bhatt. And then, of course, in 1992, NABARD piloted about 500 self-help groups in South India, and it, as on date, is the biggest self-help group, this biggest microfinance program in the world. So that was started in 1992. And as far as India is concerned, not only NABARD, but even the central bank and the government of India is focused on poverty alleviation, because a big chunk of Indians are in the throes of poverty. So the government of India came up with the Swaran Jayanti Gram Swaroj Yojana (SGSY). Under that also, there was microfinance was one of the activities, and the women's groups were given preference. And then in 2011, we had this SGSY was converted into National Rural Livelihood Mission, because self-help groups over the years there was a lot of stress on formation of self-help groups, and now with so many self-help groups in lakhs, we number 1 point lakhs of self-help groups. So now it is we are linking them up with livelihood. How can they access livelihood generation activities? So now that is the focus. Earlier, about 2 decades ago, it was on formation and credit linking, but now it is on livelihood creation. The SGSY, it was modified based on the changes in and the feedback received from the ground level. It has been converted into a very big program, National Rural Livelihood Mission. It is being taken in mission mode. And then just in 2014-15, we had many more models of microfinance. Digitization of these self-help groups was undertaken in eShakti. That has also become a very big program. Then we have joint liability groups. They are different from self-help groups. So that was another model of microfinance that was followed in India. And this Pradhan Mantri Jan Dhan Yojana, as in to enable every Indian to have a bank account. So this was again a very big, huge program, which was taken again on a mission mode. So these are the major programs that were launched in the microfinance sector. They have done very well. There have been some shortcomings, but every time feedback is taken, studies are done, the policies are reviewed, and the course correction is regularly undertaken. And last but not the least is microfinance institutions. So as far as India is concerned, we have many microfinance institutions, as in, of course, the banks are there to, they are mandated to undertake microfinance loaning, but there are specialized institutions like microfinance institutions. They are registered societies. So they could be NGOs, they could be trusts. They are specifically going for microfinance, and they have done very well. Of course, there have been a couple of events where there was, because of overlending, etc. There were some issues, but now the central bank is taking care of that. As I said, that constant regular reviews are taken, and course corrections are put in place. This microfinance institutions, we have many, and this eligibility of people who can avail of microfinance was uh, reviewed by central bank, our Reserve Bank of India, just recently, because of the issues that we have been facing in the microfinance institution sector. Now I'll just give you a very quick understanding of self-help group that NABARD had taken. It was specifically for women, and they came from a homogeneous background. And so there was a group of, like, initially it was 10 to 20 groups. It was kept at that number because it is easier to manage. And over 20, if there is a group, then it has to be registered. Now, why this group approach was undertaken was that, firstly, the women would come together, and these were mostly women who were not familiar with the banking facilities. They were very hesitant to go to the banks because the banks looked very intimidating to them. We have to understand that these women were very poor. They were not into reading and writing. They were illiterate, and so this hesitancy was there. So to introduce them to the habit of lending and repaying, how the system works, you can say it was like a mini bank. So the women would get together, and they would maybe, let us say, start with 20 rupees or 50 rupees. So this group of, let's say, 20 women, they are depositing whatever money they decide that every member has to deposit this much of money. And they would have a kitty, they would be an SHG leader, they would be a treasurer, and they would be regularly saving money. It would be decided by them amongst themselves as to what would be the periodicity of saving this money. It could be weekly, it could be monthly, it could be, well, mostly it was monthly, because the regular meeting helped them also exchange if there are any issues they are facing. They would get together, and it would help them feel better. And then every group would have a leader, it would have a treasurer. And then this was a revolving thing. It's not that a group had a leader and she would continue as a leader. No, it was like today, it is A who is the leader of the SHG. Tomorrow, uh, in maybe every quarter, they would change the leader, so that to initiate every group member to this activity of decision making. So it empowered them in that sense. And so with this regular savings, they would have, let us say, over the year, they would have a decent amount. And this particular kitty was used to lend it. So it's just like bank. If I am depositing my money in a bank at certain intervals, I would have a bank balance. So the SHG had a bank balance, and from that amount, they would lend to any group member who would be requiring the money. They could decide whether they want to keep some very nominal rate of interest. That is to augment the kitty that they were creating. And with that, they would decide if there were, like, let's say, three members in the group who would want to avail of loan. It was the group's decision to decide as to who to lend it to, for what period, what is the repayment period, what will be the repayment amount. All this the group decided. So it was a very consensuous action that was undertaken in the SHG group model. And then after 6 months, when the self-help group became kind of mature and all the members were familiar with this whole drill, then with that collective amount, they used to deposit it in the bank. And the government of India and the central bank also, they decided that this particular self-help group, they did not have collateral. It was a group of women. So the government of India and the central bank, they decided, and they made a decision that this particular group can deposit in their collective amount in the bank, and they could earn the deposit interest from the banks. So this enabled the self-help group to again get familiarized with formal banking, and they just Tashia, I'm in a meeting. So so this is how the self-help group was empowered to get linked up with the financial system. And if there were any conflicts in the group, that was also sorted out with the help of all the women members. And they were able to also, when the banks, the government of India and the central bank, they made it in, mandatory for the banks to lend out to these self-help groups, and it was made part of the policy. So the focus being that to make the banking system as helpful and as conducive for these self-help groups. So this is how the self-help groups function. And now, as I earlier shared, that we are in the a consolidation stage. So earlier we initiated the women to the habit of thrift, how to save, how to lend in the deposit in the banks and make use of the banking facility. And now we are linking them up with the income generating activities. And for the self-help group formation, etc., NABARD extended grants, and we were facilitating the government of India. They were our stakeholders. The other banks, the commercial banks, they were also made part of this entire exercise. And constant studies were undertaken, and NABARD also helped the commercial banks in formulating a rating chart, because these self-help groups were supported by NABARD through NGOs, non-government organizations. So the non-government organizations, they facilitated these self-help groups, because we must not forget that these women did not know how to read and write. So we needed a facilitator, and NABARD through the NGOs, it reached out to these self-help groups, to these women from the lower income strata. Then I have spoken about training and capacity building. So we had micro enterprise development programs. We had lively leadership, leader. We had entrepreneurship development programs. Just so I'll just quickly go through, because we are running out of time. So these were the initiatives. This was the self-help group program that NABARD had undertaken, and they were success stories. Success stories, I will just give two success stories I've included. One is in northeast of Assam, and they took up the activity of spice making and packaging. And the other one was for menstrual hygiene, which was taken up in central India. And these women were given the entrepreneurship development programs. So these have been very successful. And now with the technology, we have many interventions, and they are being undertaken through mobile banking. And we know your customer, we have KYC requirements. So all these are being introduced in the microfinance sector, just to keep our low income strata updated with the with technology, which makes it more effective. And in cases of, like, in times of pandemic and all, it comes in very handy. So there are some major changes, major challenges, like high rate of interest, and the bankers, many of them are still they are known to have this apathy for financing SHGs. So these challenges are still there. Financial literacy, many of them do not have smartphones, or they're not familiar with technology. So all these challenges are what we will be that gives us cues on how to tackle it and take it forward in the times to come. So with this, I think the timekeeper is telling me that we are moving on to question Q&A. So
thank you, Preeti. Hi,
I'm
thank
so
you,
sorry
Preeti.
about the time. I think I lost it in between.
That's okay. That's okay. It was very insightful, very informative, and I'm sure many of us would have so many things to ask for. We begin the question answer session now, and I would request all the participants to ask whatever they want to our speaker, Preeti Tolia. Yes, Javeria Sheikh. Yes, Dr. Javeria Sheikh, please go ahead.
Yes, I have a small question that how to go about. Is there an app or something where all the women with similar kind of a project could come together and could overlap their entrepreneurship skills, and they could also receive some training or some initial information, so that the finances could be granted? And what is the procedure of returning those finances, and what is the interest rate, and how much is the maximum limit of financial support that we could have offer, and what is the minimum requirement, that how do they apply for the entrepreneurship project, so that they can generate an income? Thank you.
Thank you, Javeria. May I know which place are you from? Because every country, they have different agencies through which such microloans can be extended. Which place are you from?
I'm from Karachi, Pakistan.
Okay, so well, microfinance is doing pretty good in Pakistan as well, and every country would have their own financial institutions. So app-based, well, right now we are not that technologically advanced as far as India is concerned. I don't know about your country in Pakistan, but I'm sure there must be agency, like they have microfinance institutions. And from what we know, I can tell you about the rate of interest. It's on the higher side. I can tell you easily it's over 20%, right? So in your country, yeah, there could be microfinance institutions. I doubt if it's reached the app technology based, but it varies from microfinance institution to institution. So what would be the repayment schedule? What would be the terms of, the micro loan? That would be spelled out by the particular agency that you approach. So I'm sorry about Pakistan, I cannot. But yes, rate of interest is on the higher side. But as I said, the objective of microfinance is easy, it's hassle-free, and it is timely credit. That's what you get. Similar queries could be from participants from other countries as well. So right now, this much I can share that digitally microfinance sector has not advanced to that level that through an app you can, gain access to it.
My name is Ade. I'm chairperson of Indonesia Green Union from Indonesia. Thank you so much for Miss Preeti Tolia. And this is I want to share our experience in Indonesia and maybe have relation with your experience in, especially for women rural in India. And unfortunately, we have one of condition to sometime the women's, especially for our member, have a habit to pay for a month. So we have problem to organize collecting money from the members for a month. Sometimes they have a problem with the financial household. They have problem with the community. They have problem their own self, and sometimes women many have problems. So I want to learn from your experience how to you manage and collect the membership fee with your corporation in your basis, and so we can learn from your experience. Thank you.
Right. Ade, again, microfinance is doing, the sector is quite vibrant in Indonesia as well. It is one of the few countries where microfinance has made a lot of inroads. Now, since we are dealing with women who, I mean, there was at one point in time, there was a school of thought that women are already doing so much. And then you have this microfinance where they have to, save as well as, do the household chores, look after the children. So our experience has been that the amount of savings by each SAG member should be, do you have a group approach, or you are probably doing it individually, is what I understand?
Yes, we have a group because we have
Okay.
a women corporation in Indonesia.
Right.
Have a established corporation start in 2017, and now we still grow for 5 years. So that's why sometimes we have a problem to organize the membership fee for the women's member. So I just wanted how to you collecting and ask them to have a habit to provide their money to a corporation.
Yes. So it's very important. Training is a very important aspect. So if you have an organization which is, which has got these women groups, and yes, there are issues with repayments, no doubt. But then it is, as far as India is concerned, it is the group's decision to maybe charge a very nominal amount as penalty. You could try that out, but then again, it has to be decided by the group. And then the amount, the fiscal discipline. This again is very important. So now and then you can have training programs where you can, make them understand that yes, it is difficult to repay even that small amount. We are not talking about very big amount, but then also it's why it is so important to repay, because when we take a loan, we must also think of whether we have the ability to pay it back. So now this is the fiscal discipline, financial discipline that the group members have to learn and they have to imbibe. Now there might be certain groups, so in that case you could consider penalty charges that is up to the women of the group, because what works in such groups is peer pressure. Like if there is a circle of 10 friends, and so I would I would be a little conscious of my reputation, so I would be very keen to not default. So the group, how you select the group members, how you select the group, that is very important, because when it is a homogeneous group, that peer pressure is there, which drives the women to pay back on time. And so I suggest in this particular case, you could have a kind of training program. There could be counseling even, the members of the group, they even counsel each other. Like if they in a group of 10, there is one lady who is not able to even repay that small little amount that she should be. So maybe it can be restructured. Like let's say, I mean, I'm talking in INR. So if it's like, say, she has to repay 20 rupees every week or every month if she's not able to, so it can be made a little flexible that, okay, if not 20, you try to pay 10, right? So all this works towards, because microfinance is known to have a very good repayment track record, because it's very flexible. It is up to the women's group to decide that, okay, she's not able to pay 100%, okay, 50%, and if they're not in favor of charging any penalty amount. So these are suggestions: training, counseling, restructuring the repayment installment, and of course, when the group is being formed, because that is the foundation on which the group will do well. And is it linked with the bank? I mean, this group, when they collect the money, do they deposit the collected money in the bank?
Yeah,
In your,
yeah.
yes. So
We
that
have
can also be,
account in the banks.
yes, great. So these women, especially such ladies who are not able to pay back, so we have to be considerate to them. We and microfinance gives that flexibility, which is not there in formal banking system. So these ideas can be given to the group leader, the group members, and they can try it out. And this particular member can be made to understand that because of this defaults, because she's not able to repay regularly, the entire group is kind of, falling back, so to say, because this repayment has to go back to the bank, right? Eventually, it
Yeah.
has to go to the bank. So this is part of counseling. She can be counseled on this regard, and maybe her loan amount can be restructured, even the saving fee. And if worse comes to worse, then the group has to probably decide whether to keep her on board or not. That is, of course, the last resort, because we want to take everybody along.
Thank you so much. Actually, I just heard you discussing about the rate of interest being so high. So I just want to understand what is the reason behind it? Because here they're not here to make any kind of profit. The intention is not profit, is what I understand. At the same
Mhm.
time, since we are trying to empower women, why exactly is the rate of interest kept so high on these loans?
See, when I'm talking about the high rate of interest, that is the issue we are facing where MFIs are concerned, microfinance institutions, and these came into being. They are totally focused on, the microfinance sector, which is not falling in under the purview of the SHG bank linkage program. So under SHG bank linkage program, we have smaller amounts, and MFIs, they don't have an office or the logistics part, So the MFIs, and again for timely and hassle-free credit, this is the fee you're paying, so to say. I mean, why has microfinance? Why have the MFI sector? Done so well in India. I mean, it is there are scores of people who are going for that because the credit is more easily available to them. So yes, goal of microfinance is poverty alleviation and helping out these low income strata. But that is where we need to improve upon. That is why Reserve Bank of India has come in and they're trying to regulate the market, because it is not feasible for the MFIs. They are not like public sector banks where you have an office, you have staff, you have many bank branches. You have to provide credit to this very remote, far off villages. As I said, rural India, you have a population of less than 5,000. So when you're and then you have to make it accessible. So many banks, microfinance institutions, they have the staff moving in the field, and they are taking the collective money from the group, and then they are taking it to the bank. It could be payments bank, it could be a regular bank. So it involves cost. So that particular costing is getting reflected in the rate of interest. In India, it has been tried to be regulated by the central bank, but it hasn't worked out. So this is the fee you have to pay for easy and hassle-free credit. And let's hope that over time, once the MFIs they broaden and there are more of them, and of course there is competition among them, so it will get to a little lower level. But yes, as of now, it is on the higher side.
I think now that's the end of our webinar today. Thank you so much, everyone. At one point, we had like 17 people, and yay! Thank you, Preeti. Most of all, our only regret is that we don't have more time allocated for this webinar. And thank you, everyone, for your lovely and wonderful questions. And looking forward to seeing you again in our next webinar, and have a lovely day. Take care, everyone.